Morning friends, welcome to Adda 24/7. We are in Achievers MCQ series for BFM and today's topic is liquidity risks in banking. Liquidity means, always remember, liquidity risks are of temporary nature. Okay, so follow this video till the end because this is an important risk in any banking system. If you tell me one thing, if you don't have money to pay your EMIs, so that's liquidity risk. Okay, so follow the video till the end. Firstly, download Adda 24/7 app on your mobile. In this app, you'll be getting all the premium study materials plus live classes, ebooks, tests, whatever you require. You'll be getting it over here for clearing CAIIB. Okay. Subscribe to Officers Adda 24/7 YouTube channel. In this channel, you'll be getting two things. Number one, latest updates on all the JIB and CIB. Whatever news comes in for that. Okay. Secondly, free YouTube series on all the subjects of JIB and CIB. What are you watching right now? Right now, you are watching the free YouTube series. So subscribe to this channel. Click on the bell icon. Do it immediately. Okay. These are the two new batches starting from March 24th. Join them ASAP. Okay. Because remember, portion is new, subjects are new, you will be needing a guide, a mentor, and importantly 80% off is going on right now. Discount of 80%. 80%, can you imagine the discount? We generally see the discounts of 10-15%. Now we are having 80% and double validity on Mahapacks. This is a separate part. Mahapack means what? 15 plus batches for ABM, for BFM, for ABFM, for BRBL. So importantly, 15 plus batches means it's not a joke. Okay. Also, you'll be getting use the code Y432. You'll get this 80% off. I'll show you at the end. Don't worry about that. Okay. Let's move on. Yesterday I had given you one homework. That was yesterday's topic was very important. Regarding again risk only. We are covering majorly the risk parts. Which of the following foreign exchange operations have been useful in treasury management operations? Means, which of the following are used in treasury management? Arbitrage, swaps, both A and B, and none of these. Many of you seem to be confused over here. See, here it's like this. Firstly, understand what is arbitrage. Okay? What is arbitrage? Suppose if you are, let's say, a trader. Yeah, okay. What does a trader do in any agri system, any economy? What does a trader do? Trader buys from somebody and sells it to somebody. So that person is doing an arbitrage. Arbitrage means what? Buying from one market and selling it into the other. What is this farmer arbitrage? How does it happen? The person buys it from the farmer and sells it to the common person, right? So that's an arbitrage. Similarly over here also, if I am having the shares of Reliance, let's say at NSC, I am having it at NSC and okay, NSC I am having those shares, and imagine there's in BSC also. Imagine the difference in the share price is over here. For Reliance it is at 2000 over here, and here it is 2005, let's say. Okay, for a short period. So what do? I'll buy 1 lakh shares over here and sell 1 lakh shares over here. So I'm earning what? 5 lakh rupees in hardly how many seconds? This arbitrage transaction is done in hardly 1 or 2 seconds. Okay. So this is arbitrage. What about swaps? Swap is basically, see this. Logic is very simple. 1 leg is fixed over there, 1 leg is floating. Means, for example, suppose if I tell you, I'll pay you 8% rate of interest, compulsory. Give me 1 lakh rupees. So this leg becomes fixed. What will I do with that 1 lakh rupees? I'll take it from you and invest in, let's say, stock market. So if I invest in stock market, what happens? I may get 40% returns also. I may get 0% returns also. I may get minus 40% returns also. I may get anything. So this leg becomes floating, isn't it? So this is floating, and this becomes fixed. So whatever is guaranteed by me to somebody, that becomes a fixed leg. Okay. So that's why remember, swaps means it has two legs. One is fixed, other is floating. Okay. So what is the correct answer for this? A, B or C? Both the things are used. Okay. Arbitrage and swaps. Got it? Now what is the liquidity risk? It's an inability to obtain funds at a reasonable rate for meeting the cash flow obligations. So when I want the money, if I don't have the money, then what's the use? If I don't have money to pay my EMIs on a regular basis, then what's the use? Isn't it? So that's why liquidity risk means inability to obtain the funds. So same thing might happen with the banks also. If your assets are of the shorter duration and your liabilities are of the longer duration, means deposits are of 3 years and loans are of, let's say, 1 year only, or vice versa case, loans are of 3 years and deposits are of 1 year only, then you will definitely face the liquidity risk, okay? Because the deposit person will come to you immediately after 1 year, give me back my money. But this loan person is giving you after 3 years. So that's the difference. So inability to obtain funds at a reasonable rates for meeting the cash flow obligations. Liquidity risk is of the following types. There are two types of liquidity, different types of liquidity risk. The first is funding liquidity or cash flow, while the second is market liquidity, means due to external factors, also referred to as asset product risk. Okay. So mainly funding liquidity, important one, and second is market liquidity. Okay. Let's look at this image. This will give you a better picture. Okay. It's from efinancemanagement.com. Okay. So important is this image. See this. Liquidity risk is a risk that pertains to conversion of assets, securities or bonds in cash without affecting the market price due to the unfavorable conditions. So liquidity risk basically is what? If I don't have money to pay my whatever EMIs or whatever my liabilities are there. So what are the types of liquidity risk? See this, funding and market, right? Relevant ratios. Which are the ratios important for liquidity risk? Current ratio, quick ratio and interest coverage ratio. These are the very important ratios for checking the liquidity risk. Current ratio means what? Current assets upon current liabilities. Here current ratio equals to current assets upon current liabilities. What is quick ratio or liquid ratio? Quick ratio is also called as liquid ratio. Okay, let's write this quick only. Quick equals to what? Liquid ratio, liquid assets, okay, upon current liabilities. What are liquid assets? Cash and debtors. Here liquid assets equals to cash and debtors. Okay, these are known as liquid assets. Debtors, it's not writing properly, it seems. Yeah, cash and debtors. Okay, so liquid ratio is cash comma debtors, that is known as liquid ratio. And what is this third ratio? Interest coverage ratio, right? Interest coverage means will I be able to pay my interest on time? Okay, this is always linked with DSCR and ICR. These are always covered under that, means these ratios are covered commonly. Okay, so what are the ways to manage the liquidity risk? Effective cash flow forecast, very important. You must be able to forecast your cash flows effectively. See this, effective cash flow forecast. Second, keeping the track of liquid assets. You need to keep the track of the liquid assets. So how much debtors you have, how much cash you have. Investment management, how to manage your invest, so that at the click of a button you must be able to get the funds which are necessary. Managing and reducing leverage, means getting too much leverage into leverage is a huge risk. Leverage means what? Leverage means if I buy some stock and then I get loan on that. Leverage means taking loan on all the assets. So that should always be reduced. Okay, avoided. Got it? Chalo, move on. So importantly, you got this. Types of liquidity risk are what? Okay, answer me now. Types of liquidity risk are two: funding and market. Got it? Everyone. What are the relevant ratios for liquidity risk? Managing this. Give me fast. Type fast. It is current ratio. Second, correct, quick ratio. Third, ICR, interest coverage ratio. Right? Got it? Move on. Chalo. Let's move to the question section. Question answers. But before that, again about this batch I'll tell you. Batch is starting from March 24th. All the 4 subjects ABM, BFM, ABFM, BRBL are covered. Okay. Importantly, 80% off is going on. Double validity on Mahapacks is going on. You will never get these discounts over here later. Okay. So use it immediately. Use the code Y432. Also, those who have not liked the video, like it fast. Click on the bell icon. Share it with your friends. Right? Let's move on. Question time. Uncertainty with regards to interest rate at which the future cash flows could be reinvested is known as what? Means if I am having some FD, let's say, keep it simple. If I am having some FD for, let's say, 2 years, okay, at, let's say, 2 years means I'll call this, I'm having this, let's say, at 8%. So my risk is what? The risk is whether I'll be able to reinvest this FD after 2 years at the same rate or not. So that is known as which risk? Reinvestment, interest, gap or mismatch, and none of the above. So it is called as, everyone, correct? It is called as reinvestment risk. Reinvestment risk means I am always concerned whether I'll get the same rate of interest after the maturity of this duration. Okay. When a bank borrower or counterparty fails to meet its obligations regarding the terms agreed with the bank, it is called as, means what? See this, if there is a customer of your bank, you have given a loan, okay, and now that customer doesn't have money to repay a loan, repayment is in problem, okay, no repayment. So that is called as which type of risk? Market, operational, liquidity or credit? Type fast in the comment section. It is, everyone, it is credit risk. Okay, credit risk. What is the credit risk basically? See this, credit risk is of two types always. I'll just show you here only. Credit risk is of two types. One, country risk, means if the country of the borrower fails, means this is mainly in exports. What happens is I'll sell it to someone in, let's say, Pakistan. Okay, and then what happens? The country fails. They don't have money. So even though my customer is okay, but that country might not send the money to me. Afghanistan, immediately Taliban comes in. They'll say no more funds going out of my country now. So even though my customer is good, the country's regulation is in problem. Or second is counterparty. Counterparty means what? My customer itself is bad. I have not checked that customer. I have directly sold that my goods to that person, and then that person is not paying me. Credit. Okay, so that is credit risk. When a bank chooses the wrong strategy to follow, follow a long-term business strategy which might lead to its failure is called as, means when your thinking is not right. Thinking is not right means, for example, let me give you an example. Nokia. Everyone knows Nokia. Nokia was the biggest brand in 2005, 6, 7, 8, up till 8, isn't it? In mobile phones. Where is Nokia today? Hey, do you have Nokia phone? Just type yes in your comment section now. Do you have Nokia phone? Everyone? Are you using Nokia phone now? No. Why? Where is it gone? Because they didn't look at the Android system coming up. Android, they should have joined this bandwagon of Android, but they missed it. So that's called as which risk? Credit, operational, market or strategic? It is called as strategic risk. Okay. So Nokia, similar. This is one example. There are many examples as such. Okay. Uncertainty with regards to interest rate at which future cash flows can be reinvested is known as, means if my future cash flows are reinvested, so that uncertainty regarding that means whether if I am getting some interest over here or whether I am getting some cash flows. If I am, let's say, getting one per month, I am getting 1 lakh rupees, okay, as a income. So that income, if I have to reinvest it somewhere, so that is called as what? Reinvestment risk, interest rate risk. It's here, uncertainty is regarding the interest rates. Remember, this is the important word in this question. Regarding the interest rates, reinvestment risk, interest rate risk, gap or mismatch or none of the above. So the answer is obvious over here, isn't it? It is called as, everyone, interest rate risk. Okay, it is called as interest rate risk. Got it, everyone? Because interest rate, what is interest rate risk? Interest rate risk means if my rate of interest, asking rate, yield I'll call it, that is called as, another name is yield over there. If yield goes up, okay, the prices of my bonds, okay, price of my bonds go down. Price of bonds, okay, goes down. Okay, that is known as yield, interest rate risk. Okay. Now one for your homework. The yield to maturity of the bond is same as present value of the bond, the future value of the bond, bond's internal rate of return. None of these. Now this is what you have to check. Very tricky question, but very simple answer. Tomorrow I'll answer it. Okay. Everyone check this. In the meantime, I'll show you how to use this code Y432 to get 80% off and double validity. Remember, in this class we are covering all the 4 subjects: numericals, objective questions, case studies, everything, and that also at 80% discount. Okay. So let me show you how to get this discount. Firstly, I would suggest go to everyone, download the app first. Okay, because in the app you will be getting 1% extra. 81% off you will be getting. Okay, let me show you. Okay, let's go to Adda 24/7 live. Okay, you are here on Adda 24/7. Click on JIB and CIB. Click on CIB 2023. Okay, clicked. Now on CIB 2023 you will see the batches. Okay, click on this English batch. You will see the details of the batch. Details means what are the dates, what are the timings, how many days in a week is the batch. Then you'll see the study plans. Then you'll see recorded videos here. Recorded videos are available 24/7. So if you miss out on any class, you can definitely get back to it. Okay. Second way, two-way interactive classes. Two-way means what? You can ask the questions there and then itself and clarify your doubts. That is very important, isn't it? Ebooks are available. Ebooks are available means what? You can get the ebooks. No need to read any other book then. Tests are available. Okay. That much is enough. Okay. Be confident. That much if you do it, you will definitely clear it. But discipline is an important part over here. 23,999 fees. Click on view offers. Put the code Y432. What is the code? Y432. Type fast. Yeah. See this. 23,999 reduces to 4,799. 80% off you are getting. Such a huge discount, and validity 6 months. Okay. So such a huge discount you are getting in this batch. Okay. Now one thing I'll tell you. Instead of going in for a single batch, go for Mahapack. What is this Mahapack? Let me show you. Let's go to CIB ka Mahapack. Look at this. Go on the front page again. Okay. You'll see over here JIB CIB Mahapack. Click on JIB CIB Mahapack. Click on CIB ka Mahapack. See this CIB ka Mahapack. This, got it? Here you will see the details. Means what did I tell you? 15 plus batches for all the 4 subjects: ABM, BFM, ABFM, BRBL. Then you are getting ebooks available. There are separate case study batches. Full length mock tests are available. Everything you get it. That's what I am saying. Join the classes ASAP because subjects are new. You will be needing a mentor. Okay. Click on this. See this fees 35,996. Click on view offers. Put the code Y432. Y432. Click on apply. Look at this. Again 80% off, and look at the validity. 12 months. 6 plus 6 months. So 7199 is the fees, and that also for 12 months, and that also for 15 plus batches. Now calculate per day. It is what? If you calculate this 12 months, you get 20 rupees per day, and 15 plus batches, it is almost 1 rupee per batch. Where are we? And it's an investment for lifetime. Go for it right now. Okay. Why? Because the subjects are new, topics are new, portion is new. You will be needing a guide, and you are getting the batch at almost 1.5 rupees per day. One batch in the Mahapack. 1.5 rupees. What is this? Isn't it? Go for it right now. Okay. I'll be back tomorrow with another series. Till then, bye. Everyone do join the batches.